Good afternoon. So we will start the today's session. And before that, um, let me just to talk about what we have studied last week, right? And today is the 28th June, so we'll try to finish what we have learned uh, during the last week. So we discuss what is venture capital and what are venture capital companies are basically, and they are the people who act as an intermediary to mobilize and transfer capital fund from processors to needy people, right? For if a person need capital to start, he may have a nice idea, good idea. So there are some people, some wealthy customers, and they invested money in for their um, activities, right? So that is what you call venture capital. And then we discuss about the life insurance policies, and it is an agreement between insurance company and the insurer, and with the benefits of a designated amount will going to um, going to get something happen to the policy holder. So we discuss the risk, benefits, characteristics of life insurance policies last time. And also we discuss a product called annuities. It's a long-term sort of a retirement benefit. You need to pay continuously for certain amount for a certain period. After that period, so till you die, you get the agreed amount, right? And then we discuss about the concept called the longevity risk. Now, what do you mean by a longevity risk? Is that mean the person or living beyond their normal life expectancy? Right now, this is the sort of a risk faced by the financial institution when they introduce a product like annuities and pension product, things like that. Usually, the person is going to die, we assume, in around 75 years. If he going to live more than 75 years, so the banks or financial institution to pay agreed amount continually till he dies. And that is what you call longevity risk. Longevity risk mean basically living long beyond normal life expectancy, right? So we discuss this one as well. So then we discuss about the retail customer and the corporate customer. Who is the retail customer? And retail customer is basically obtain the services from a bank for his personal need, whereas the corporate customer usually obtain bank services for business purposes, right? And then we discuss another difference between a retail customer and retail customers are basically bank caters to banking need of individual customers, we call retail banking. Banks are servicing to corporate customers, we call corporate banking. Usually, the retail customers are number wise large number and ticket size is small. The ticket size means the transaction volume may be less. Whereas the corporate customers, the number of customers are less, but their ticket size, the business volume is high. So that is the difference between retail customers and corporate customers. And then we discuss the type of borrowers, and we discuss the borrowers, and then we discuss type of borrowers. Now, say for an example, type of borrowers mean basically there may be a individual customers as well as business customers, or maybe societies, companies, and then partnership companies, associations are basically we have a different type of borrowers, and they are taking loan for different purposes, maybe consumption, maybe for business purposes, construct a house, to buy a vehicle, like that, for agriculture purposes. There are various purposes customers who take a loan from a bank. And then we discuss what are the factors to be considered before granting a loan to a customer. So we will discuss basically these 5 C's. 5 C's basically. We look at it 5 C's. That mean the credit worthiness of the customer, and then these credit scoring scheme, credit ratings are some of the factors. What type of securities is going to give. So we briefly touch what are the factors to be considered before granting a loan, and then we further discuss the loans. The advances can be divided. The loans can be divided to two types: direct and indirect lending. Sometimes we call direct advances and indirect advances, or sometimes we call direct and indirect lending. So, what are the difference between direct and indirect lending? That means direct lending means the money is going out from the bank, right? So therefore banks cash flows are moving out, so it is affecting the liquidity, right? It is an balance sheet activity. Then whereas the other side we call the indirect advances or indirect lending, mean money is not going out from the bank, but you are undertake, if your customer is not paying, so you are undertake to pay that loan. That is what you call indirect advance. So direct advances are basically we call them as all the loans, right? From personal loans, all type of loans are direct, money is going out. What are the indirect lending or indirect advances mean? Shipping guarantees, a letter of credits, and things like that. So then we discuss type of securities and documentation. So there are different type of securities customer can banks may take from movable, immovable, and things like that, and also documentation. So we discuss how important the documentation also, right? And then we discuss what do you mean by a loan account. What do you mean by a loan account? The loan account mean basically when you're creating a account, creating a asset, we call them as a loan account. Okay, loan account mean usually when we are method of lending money by which the proceed being credited to current or savings account, and thereby customer creating a asset value is called loan account. And then we discuss what do you mean by penal rate, right? Penal rate mean that could be charged by a bank on loans and advances from a customer during the overdue period. Now those things what we have discussed last time. And then there's another one where I'm not right. The loan account, what do you mean by a loan account? And floating rate. So we have not discussed about the floating rate, right? And please write a small things under floating rate. If you, I have not explained to you under floating rate, I can remember. Please write down what do you mean by a floating rate, right? In your handout, just put down what is floating rate, right? I'll dictate now. Okay, so floating rate mean interest rate paid by the bank, interest rate paid by the bank, or charge paid or charged by the bank, interest rate paid or charged by the bank for stroke from the customer depends on the interest rate, depends on the interest rate moving, depend on the rates moving upwards or downwards, right? That is floating rate. I repeat it again: interest rate paid or charged by the bank for or from the customer depend on the interest rate moving upward or downwards. Now why? Now if you really look at it, banks are willing to put the floating rate. right? It's depend on the market interest rate. Suppose the market interest is going up, accordingly, so you are charging higher rates. So the market interest rate is going down, accordingly you are charging less floating rate, less interest rate. That is what you call floating rate. Now floating rate may take what type of customers? The customers who are going to take the risk, they may go for floating rate, right? But other customers are usually preferred. Risk averse customers are usually like to have a fixed interest rate, right? That is floating rate. And then we discuss type of loans, right? We started with type of loans, and the first loan we discuss term loan, right? I give you a small loan. Usually term loan is usually used for to granted for acquisition of fixed asset or buy a fixed asset like land, building, and things like that, and or maybe buying for set up new businesses. Usually term loan, as the name implies, a longer term, usually from 3 to 7 years, and they may pay regular installment, right? So term loan are given by the bank, usually with some security, right? So we discuss all these things greatly. And then we stop that day, we discuss about overdraft. So what do you mean by an overdraft, right? Overdraft, I gave you on note, given to current account holders who have a good banking relationship with the customer. And we discuss what is permanent overdraft and what is temporary overdraft, and then we discuss what is casual overdraft. Remember how casual overdraft differ from other two types of overdraft. Over two other term, permanent overdraft and temporary overdraft given by the bank because with the request of the customer, whereas the casual overdraft is given by the bank without getting concern from the customer, right? Because of the relationship is the factor that gives the casual overdraft, right? And I'll give, okay, just look at it with this, and this is the question came on 2015 in financial client management. And what is the difference between a permanent overdraft facility and a temporary overdraft facility? So this is the question came on 2015 in financial clients management, where you get 2 marks. So therefore, you don't want to write a lengthy answer, right? So what is difference between permanent overdraft and a temporary overdraft? So, okay, then you divided into 2 columns, permanent or POD and TOD, we call them as. So what are the characteristics of a POD? POD basically, if you want, just write down for one. Usually, both overdraft facilities are need to be informed to the bank. But here it has the differences, no? Right. Now you can say first one under permanent overdraft, you can say to mark a limit of credit, with a prior arrangement, with the bank, with the specific amount and the specific interest rate, right? Specific amount and the specific interest rate, right? And remember, permanent overdraft usually secured with the collateral. Permanent overdraft usually secured with the collateral, but temporary overdraft is not usually have a security, right? That's one difference. And also permanent when you compare with the interest rate, permanent overdraft interest rate is comparatively less than temporary overdraft. And temporary overdraft also given for usually for a shorter period than permanent overdraft. So those are the some of the differences, right? Okay. right? So I think you understood that point. Okay, then this question is not from financials client management. This is for commercial banking question, right? Even for you to answer to the commercial banking question, you can use that the theory or things what we have learned last week. This is in September 2014. Which one of the following is the maturity period of a TOD? TOD mean term or demand, temporary overdraft. So one of the important things I told you about the TOD, when the customer put the deposit in the bank, when the customer want the money, so what? Customer if ask the money from what he have deposited with the bank, irrespective of the term, bank compelled to give them money. But banks also can ask from the money from customer. So therefore, there is no maturity period, right? So then what is that one? So that is what you call on demand, on payable on demand, right? There's no limit. Okay. Even though it's a short term, but if they ask, bank will ask the money. So the customer is asked the bank is asked the money from customer. The bank customer need to pay that money. So that is what you call answer to this is on demand. I told you when you discuss the characteristics of TOD, payable on demand, right? Okay, then I can remember I'll give you a small thing, some small question to apply our normal theory, format. What is the format? What are the characteristics of TO overdraft? Then we discuss what are the who are the target customers of. Can you remember? Now there is something, so don't worry if I go and write it here. So after some time it's going to be clear, right? Okay. Can you remember again? What are these features and or characteristics? Right? This is the format, huh? Right. Then who is our target market or target group? Or who is going to buy my financial product? Third, benefits. Benefits to customer, benefits to bank or financial institution. Then the fourth one, you say risk. So risk again to customer, to the bank. Okay. Now this is the format, right? Remember this, any product when you're studying, if you're learning product, remember to know this points, right? Okay, now put the overdraft here. So what are the things you're going to write? What are the characteristics or the features of overdraft given to current account holders who have a good banking relationship with the bank? Remember the word, who are able to get the current overdraft? The people who are having sort of a current account and also have a better bank relationship with, right? Okay, so that is a feature. Then what are the advantages? Who are the target group? Who are the people who are going to buy? Is usually for business people and some individual customers, right? Okay, business people and business customers and individual customers both can get this. Both are the target groups, right? Then the second point, the benefits. Now, what are the benefits to the customers of if they need some urgent requirement? It's to facilitate short-term working capital requirement, right? Short-term working capital requirements. If you need some money for short-term financial requirement, and they can get the OD, right? Okay. So what are the benefits to the customers then? Sorry, to the bank. So usually banks are charging high rate of interest, right? Okay. It's usually high rate of interest, and also Thereby, bank can have a better customer relationships, longer customer relation. Those are the benefits to the bank. So, what are the risks to the customer? Again, what is the main risk? One thing is again high interest rate. Second risk is payable on demand. If the bank asks, right? So we need to pay the money, right? And also bank can withdraw the OD facility if you are not maintaining a better um, uh, transactions. I mean, so if you are not maintaining your current account properly, the bank can ask to cancel their OD facilities. Right. And what is the risk to the bank? Right. Remember, some ODs are given without security. So therefore, automatically, a bank is exposed to credit risk or default risk. Okay. Right. So now you see every product, if you put into this slot, so you can get a better idea. Okay. Right. So these are the question I gave you just to think. Right. Any product, put this concept and then you can answer any question. Okay, now we are moving to another, today we are moving to another type of loan, that is what you call housing loan. Right, housing loan, sometimes we call residential mortgage. Right, sometimes housing loan you can consider as residential mortgage. Right, residential mortgage, another name for housing loan is called residential mortgage. Right, okay. Now why customers are taking housing loan? For five main reasons, right? Usually take for five reasons. So what are the reasons why you need housing loan? What is the purpose of your getting a housing loan? Housing loan I'm getting for five purposes. What are the five purposes? Right. The first one, to purchase a residential property. So to buy a house, right? Second, to buy a land and a construction a house. First, buy a land and to construction a house. And also sometimes you are having a house, a loan, you're having a land, then you need to uh, construction of house in own land. So that's another one. You have a land, but you need to build a house. And then sometimes you need to renovate your existing house. So maybe you want to add something to existing house. That also you can take housing loan. And also housing loan given to redemption purposes. Now, what do you mean by redemption purposes? Mean, now say you have in a housing loan with bank A. You are presently is having a housing loan at bank A. Now that rate is maybe around 15% per year or so, like that. So now you want to go to another bank where that B bank is giving 12% interest. Right? For that, you have to close the account, loan account at bank A and move to the bank B. So that is what you call redemption. Now, remember the bank A, now bank B easily can get loan from bank A. No, why? Because a bank A has done the initial everything. Check his land clearances, street clearances from respective authorities, and easy to give the loan to the second guy at the reduced rate. Right, in order to prevent banks moving from a customer moving from bank A to B, what bank is doing, if you are going to redeem, they will charge extra rate. I mean, maybe redemption fee. So that fee may be little high. So therefore, customer is not moving from bank A to B, even though the bank B offers a low interest rate, right? So, but anyhow, so the banks can give housing loan for these five purposes, right? To buy a house, purchase a land and construction a house, to construct your own. You have a land, you want to construct a house, or maybe you want to renovate or add something to your existing house, or maybe redemption purposes. So housing loan can be taken by customer for all these 5 reasons. And remember, housing loan are usually long-term repayment facility. That housing loans are giving to the customers for basically for 10 to 25 years period, right? Usually is long repayment period loans, right? And your property, remember, it is to be mortgaged to the bank. So your property to be mortgaged to the bank. That is the security of the bank. Okay. Usually the bank is asking to obtain a what? Protection insurance, mortgage protection. So sometimes the bank will ask you to get an insurance cover to your property, maybe house. Why? Because that's a security. Both parties get benefited on that. Okay. So there may be a different interest rate. As I told you, some banks are now offering floating rate for some 3 years. After that, the balance 10, suppose the customers take for 10-year period, first 3 years floating rate, next 7 years fixed, or maybe entirely period maybe floating, or maybe entire loan period customers need to pay fixed. So that depend on the type of customer, depend of the interest rate moving, customer has the option to take. Okay, so those are the housing loan features of a housing loan. Right. Now let's discuss about the, and remember also you need to mention that when you're getting a housing loan from bank was requesting to get provide you some documentation. Right. Now the documentation mean title deed, maybe survey plan, maybe approved building plan, we call BOQ, right? Streamline clearance from respective authorities and non-vesting certificates like that. So banks need lot of documents before you are granting a loan, because why? You are going to take as a security your loan, your house. So therefore they need some clearances from respective um, authorities, right? Okay. The next credit product is what you call the credit card. This is a very famous one. Now the credit card is basically is a small plastic card issued to users as a system of payment, right? You know what I don't want to explain much more on a credit card, and it allowing the credit card holder to buy goods and services based on the holder's promise to pay these goods and services. Now he can, if you have a credit card, so you go to the merchant and buy some goods and give the credit cards, and thereby you can purchase. So credit is given by the respective bank to you, the form of plastic card, right? And issuer, that means your card issuer, creating a revolving account. What do you mean by a revolving account? Suppose when you evaluate your customer, and the bank will decide that depend on this income level, bank will decide the credit limit, that may be 100,000, 200,000, 300,000, things like that. So the revolving mean, suppose if you go for merchant and you buy up to, so your card limit is 200,000, you purchase 100,000 goods, right? So what is your card limit now? 100. Suppose if you pay another 50,000 to a bank, and then your limit again increased by 50%, 50,000. So now your card facility is 150,000. That is why we call it is a revolving. right? Okay, and also if you're using your credit card, sometime you can take a loans also, advances also, right? But for you need to pay little high interest rate for that, right? Because if you can use your credit cards to take the loan from your ATM machines, right? So these are some of the credit cards. Okay, now let's look at it. See, what are the difference between credit card and a debit card, right? So let's look at it now. What is the difference between credit card and debit card? Likewise, you can just put down two columns like this. So we'll discuss now. So you put here the debit card, right? And here you put the credit card. Now list 4 points between debit and credit, right? So we discussed both in debit card earlier, right? Debit card. So what are the differences? Can you write one differences, right? Okay. Can you write one differences? Okay. I think you can read. No difference. Okay. Write one differences debit card versus credit card. What is the one difference? Tell me one difference. Now, remember, debit cards issued by bank to account holders. That's the first point, right? And here the credit card, you don't want to have a account, right? Okay. So first difference is debit card, you can say, issued by banks to account holders to facilitate limited banking transaction and payment through bank account, right? That is the debit side. So what are the things you need to write under debit card side? Issued by bank to account holders. Issued by bank to account holders to facilitate limited transaction, right? To do some limited transaction and payment through bank accounts, right? Okay, whereas the credit card, what are the things you can write under credit card? Issued by banks to credit-worthy customers. Issued by banks to credit-worthy customers. To credit-worthy customers with a credit limit, depending on what is customer's income and credit worthiness. And you know, the credit card is a risk, you won't get any collateral or any security, So therefore, credit cards is purely depend on customers' credit worthiness and income. Right? Remember. Okay. Whereas the debit cards are issued by the account holders. Right. That's the first difference. Second difference. What is maybe the second difference if you see? Now, credit card can be used depend on the account balances, depend on your account balances. Now, say if your savings account is having 100,000, what is your limit? Is debit card limit is 100,000, right? But whereas the credit card is depend on the credit limit given by the bank, right? Okay, that's another differences. Okay. And usually for credit card side, so you are basically subjected to charges like late payment charges, usually high interest rate, But whereas the debit card, there won't be a charge like that. No, why? Because you're using your own money, right? So another difference, right? And also you can say credit card you can use to take some cash advances from ATM machines, right? Advances also facilities. Okay, these are the some of the differences between debit card and a credit card, right? I hope you got the some idea about the differences between credit card and a credit card and a debit card. Okay, right. So let's look at it now. The back to our notes, right? Uh, so you know how credit card works. So you have both customer and the banks have to agree a certain amount of my limit based on the credit worthiness and the income level of the customer, right? Okay. So then electronic verification systems available for merchant to verify in a few seconds your card and given authority to do the transactions, right? Okay. So as I told you, the interest rate is usually high. So banks can get other fee-based income like issuing a credit card, issuing card, the late payment charges, things like that. Those are the extra income a bank going to get through credit cards, right? Okay, right. Now, let me, sorry. Okay, now let's look at it. Before you writing the auto loans, okay, let's look at the auto loans also. Really, another type of loans. Now, what are the loans we discussed up to now? Type of loans we discussed. We discussed term loan, right? And then we discuss overdraft facility, and then we discuss credit cards, right? And we discuss housing loan. Now we are going to discuss auto loans. Now, in 2017 or 2018, in financial crisis management, usually the 10 question is usually asked to write small notes, right? One questions appeared in 2018 paper, write short notes about the auto loan. Now, some of the students don't know what is auto loans. Now, what do you mean by auto mean? Is a vehicle loan. Now, people thought auto loan mean automatically loans. The banks giving automatic loans without having anything. So, auto mean vehicle loan. Remember, auto loans mean vehicle loans. The auto loans are credit facilities granted to purchase vehicles mainly for individuals. The banks are giving auto loans for individuals to purchase vehicles, right? The assets, what is the asset here? The vehicle is normally mortgaged to the bank. So that is why we call them a house is fixed, no? But here the mortgage, this mortgage is not a fix, right? So that's the difference between a house and an auto loan. So the vehicle is usually mortgaged to the bank. And then, so how you are granting a loan? We look at it, the client's income, the customer's income details, right? We need to verify before you are granting a loan. And also we take into account the valuations of the asset. What is the valuation of the asset mean? What is the car value? Usually when you're granting auto loan, we won't give you the checks to the customer, right? We are usually giving the check or the loan amount, we are usually giving to the merchant, the car selling company, right? So in apart from that, you can put under auto loans, usually what is the period, right? Housing loan, what is the period? It may from maybe from 10 years to 25 years or even for 30 years, depending on your age. But auto loans are usually granted, loan period vary from 2 to 7 years. Why not more than that? Why auto loans not give for 10 years, 12 years, 15 years? Because what is the mortgage you are going to take? Car, the vehicle. So therefore, vehicle life period, you are basically thinking less than that, right? That is why we are giving auto loan for a shorter period, usually giving 2 to 7 years. You can put down under the auto loans. Usually, loan period vary from 2 to 7 years, 2 to max 7. Won't give more than that, right? Okay. You need to look at it every time you get a type of a loan. You see what is the period, right? Okay, 2 to 7 years. And also, like housing loan, you need to get insurance, of course. Now that insurance need to be assigned to the bank, right? You can put the second point. Usually, insurance of the vehicle. Now, if insurance you need to take, usually you take full insurance cover. Now, insurance of the vehicle is assigned to the bank. So that means that now is the owner of the vehicle, you can use the vehicle, but you need to assign your insurance to the bank, right? Okay, that's another feature, right? Now, now if the auto loans things, now the central bank as our regulator maybe put some conditions. What are the conditions they talk about? I think you may learn these things under maybe commercial banking and things under subject. So that is what you call LTV. What is LTV mean? Loan to value ratio, right? So the loan, basically the loan facility is maybe regulated by the regulator. That means, say for an example, at the present situation, if you want the car value is maybe 100,000 for an example. 1 million, say for an example. So regulator telling the bank, so you can't give 1 million, you can give maximum loan of 500,000. So that is what you call loan to value ratio. Value is 1 million. What is the loan you can give? 500,000. So that is loan to value ratio. Right? Why? Because to control sometimes, so central bank is given banks not to give 100% loan to auto loans, right? There may be a time period, depend on the time, there may be a restrictions. Now, only these days, house three-wheelers can give 25, only buses and transport vehicles can give only 75%. This LTV ratios are differs now, depend on the time. Sometimes we'll increase, sometimes we reduce. Like that is loan to value, right? Then the next point you can, as I told you, you can say the loan facility is extended as per the percentage recommended by the regulator from your loan value. So car value is 1 million, bank give only 50% of that. That is loan to value. Okay, right? That is auto loan. And there's another type of a loan. Actually, this is not a financial loan product, but it's a very famous product in the market. That is called pony, right? Pony. Now, what is pony? Pawning means using your gold as a collateral or as a security, and you get an advances is term pawning, right? And pawning is, mind you, it is a 1 year period. You have to renew it. That is different thing. But your loan period is 1, right? So what is the collateral or the security bank is getting? The articles, so the gold from the customers. And why pawning is become popular? Because you getting to the bank, you can easily get the loan facility, right? So today the banks are the banks are basically uh, very much interested of, because usually the interest rate is high. Now, usually the pawning interest rate is around 70 to 18%. But now in these days, government is given a certain restriction. So regulator given some instruction to bank, you can't charge more than 12%. Right? Therefore, less than that, you can check. But earlier, banks are charged around 17 to 18%. But now, central bank has given instruction, so any bank cannot charge more than 12%. The maximum you can charge 12. Now, some banks are giving even less than that, right? Okay, and banks usually considered and this pawning as a risk-free transaction. Why? So we have the gold with us, and again the value of the gold, right? So the advances are giving less than that. Suppose the gold pound price is say 60,000, so we are giving 60,000. That is what you call loan to value. In Sri Lankan business, usually the People's Bank, the main leader in pawning business, and next may be the Bank of Ceylon, third NSB, fourth is the HNB, fifth is the Sampan. So these are the order. So who having the major share of the pawning facility in Sri Lankan banks? Number one is People Bank, is around 130 billion lot, and the next is the Bank of Ceylon around 70, 60, and then NSB also having 35 and billion total loan portfolio, and next the HNB, and then the Sampat is around 30s, right? So these are uh, the features of a pawning business, right? These are some of the characteristics of pawning. Right, now we have learned three type of loans. Okay, now let's look at it, this question. And these questions came September 2015, right, and March 2015. Same thing, right? Okay, put this one. If you know all these things, credit cards, residential mortgage, pawning, right? Can you apply for these? Let's try to answer to this question. Okay, now you know the format, right? Now you know the format. Okay, right. So what are the three products we are going to put it, right? So let's look at it. Three products, right? Okay, what are the three products? Credit cards, credit card. What is the next one? We call residential mortgage. I told you residential mortgage mean what? We call them as housing loan. Right. What is the third one? We call them as pawning. Right. Now let's look at it first. Right. We'll take the first product. We call them as housing loan or residential mortgage. So if you apply this, what are the features of a housing loan? You can say it's a long-term loan, right? It is a long-term loan given by the bank for various purposes to our customers. What are the various purposes we discussed? To buy a land, to build a land, build a house. So buy the house, right? If you have a land, to construct a house, to renovate or redeem. So these are the purposes of housing loan given by the customer, right? Usually, remember, loan is recovered by monthly installments. Monthly installment. Loan is recovered usually by monthly installment, right? Okay, clear. And sometimes interest may be fixed or floating or mixture of that. So these are the some of the characteristics of housing loan. Right now you look at it, features of housing loan, right? Okay, so what we have learned, put it here. Then, so what the target group? Second section is target, and we are referring to housing, right? Uh, House customers, right? So customers who are having a regular income, customers who are having a regular income, because why? Customers need to pay installment monthly. So for that, customers need to have a regular income. For salaried employees, example, for salaried employees, or they can, some customers who are having EPF, right? They can take housing loan against APF fund. If you have a APF, you can get a housing loan. Or sometimes, other than the salaries employees, there are some type of customers who are paying regular income tax to the government. Inland revenue. If you can show I am paying income tax continuously to the government, so that also can be used to obtain a loan. So that are we call target groups, right? The customers or newly married couples, or maybe new customers who can show to the bank, so I am having a salary, right? Or me, I'm a taxpayer. So then you can obtain a housing loan. Those are our target group. Now let's look at it. What are the benefits to the customers by having a housing? So one benefit advantage is customer. It's a because of the housing loan is a longer term, right? So customer can buy or build a house where otherwise he not get a big such of big money to his hand. So only he can build a house, he can renovate house. Those are the advantage to the customers. So what are the advantage to the bank then? What are the benefits to the bank? So what are the benefits to the banks? One thing is you can do cross-selling. What do you mean by a cross-selling? Right? Cross-selling mean, now cross-selling mean selling another financial product to your existing customer. Selling another financial product to an existing customer, we call them as a cross-selling. Right? There are different type of selling, right? I will explain to you. Now sometimes people are calling upselling. What do you mean by upselling? Upselling mean parana baduwa dila aluth ekak karan yan. So sometimes you are bars or singers are telling, please bring your old TV and get a new one. Right? So that is what you call upselling. Parana car එක දීලා, right? Aluth car එක. That is upselling. So you can do something, if you can do other things also, but parana එක දීලා අලුත් එකක් ගන්න හැම එකටම බෑ, but certain items only, right? Okay, so that is what you call upselling. So this is cross-selling. So why I am selling cross-selling? Usually if a customer comes to get an housing loan, bank will open a savings account. Usually that's happened. No? Then you ask the customer to convert your salary to this savings account. And then you issue a what? Issuing a standing order from that your entire salary comes to your bank account. Right? Because you buy a housing loan. Customers take a housing loan, but you get your other business also. You can open a savings account. You can ask your customers to send the money to your bank account, right? Things like that. And also remember other important things. The bank, I told you, the housing loan is a longer term loan, right? So bank is getting a regular income for a longer period, and also that customer with you for a longer period. Why we can't go out? Because he has taken a housing loan for maybe 15 to 20 years. So customer is going to live with you. Customer is going to stay with you for a longer period. So those are some of the benefits. A housing loan you are going to get. Now we look at it, the risk involving in housing loan, right? What is the risk, right? As far as the banks are concerned, what are the risks faced by the banks? And it may be sometimes, right, is credit risk. The customer is not going to pay the loan. So then what happened? So bank has to go through legal procedure to recover the money. So what is the procedure? We are going to learn all these things. We are going for parate execution. It's a long procedure, right? It's a long procedure. You can't take the property at once. No, it's a long process. We need to do some legal actions. It's a headache for them. Bank is not to get the property. No, banks need the installment back, right? And that's a disadvantage or risk to the bank. And also sometimes, and because of that, banks are facing liquidity risk also. What do you mean by liquidity risk? Right? One thing is credit risk. Credit risk means customer is not paying the housing loan the customer has taken. Second risk is the liquidity risk. What is the liquidity risk? Because how banks are giving loan? Customers deposits only bank give loans. Customer deposits are short term. Housing loans are long term. And there is a mismatch. If the customer comes and asks the money, bank need to pay, right? Why this customer is not paying the installment? So therefore, bank may face some sort of a some sort of a liquidity issue, right? So those are some of the risks faced by the bank. Then you look at it, what is the risk faced by the customer? Again, it's a long-term nature. The banks may sometimes maybe not pay continuously his loan installment, and therefore there may be a penal rates, right? Penal rate, can you remember? If you are not pay, so you have to pay extra for that excess amount. And also sometimes if the customer not positioned to pay the loan, bank can sell the because the customer need to mortgage the property with the bank, so the bank can sell his property, right? So therefore customer is losing his house. So these are the risks faced by the those are the risks faced by the customer, right? Now here, okay, now if you add some more points to here, what are the marketing tactics you use to popularize this product? If you add another point, another topic. Okay, now we are usually discussing features, characteristics, target groups and market, benefits to customers and the bank, and risk to the customer and the bank. Now we put another point here, marketing strategies. Marketing strategies, if you want, right? You have to remember this. So what are the marketing strategies banks are using to popularize these product, housing product? We take housing, no, residential mortgage. What are the marketing strategies used by the banks? They can put nice TV advertisement, right? Right. Bank can put nice TV advertisement. Bank can conduct what? Banks may be, now you see, now these days is not having But then we have a lot of exhibitions are taking place, right? Housing exhibition we call cadal, and banks exhibition stores going to be there. So the people are moving around, and banks is having a stall, and then bank can ask customers to come and explain the benefits. And again, apart from that, there are a lot of you see architect exhibition, cadal exhibition, construction exhibition. A lot of exhibitions are usually taking place in this BMICH, right? So a lot of customers are coming, so banks can have a stall there, can sell their product. And also sometimes there are some specific magazines, housing magazine, newspaper articles, right? And you can consult architect, like that. Some also you can go to this property sellers like homeland, guys. Through them also you can get a loans, right? Okay, so these are some of the marketing strategies. Now that is for your residential mortgage, right? Let's look at it now. The same question, we put it pawning. Now what is pawning, right? If you put a pawning, you say pawning is what type of product? It's if you use your gold as a collateral, you can get an immediate cash, short-term requirements, right? You put the features. Then who are the target group? Most in Sri Lanka, the target groups are farmers, usually farmers, right? Some people who need quick cash, normally general public as well, and but especially for farmers. So they use during the after the harvesting, they buy a lot of pawning articles, and during the if they don't have money for cultivation purposes, they again go and pawn the article in the banks, so they get some advances like that, right? So target group may be farmers, normal customers. Then what are the benefits to the customers? One benefit is you can easily obtain without having the process of documentation. Just you give the articles, you can get an immediate cash. So that is the benefits to the customer, right? Immediate cash. And what are the benefits to the bank? So bank is usually charging high interest, right? But at the moment is 12%, but usually have a high charge because banks have a superb collateral, that means your gold. Now these days gold prices are good, right? Remember. So then what are the risks to the customer? The gold loans are usually giving short term, 1 year. After 1 year, the customer is not pay you the money installment. So whatever the bank can sell, we can auction the articles and collect the money. So therefore, that's a risk to the customers. You are losing your sentimental, you maybe your seller, your wedding ring, maybe your wedding chain, you are more pawned. You may losing all these things. Then what are the risks to the bank? Bank also have a lot of risk. Why? Suppose the gold price, now these days, okay. If the gold price has come down, customer is not going to pay, no. So therefore, fluctuations of gold price, you may reduce your income for your business. And another risk also, sometimes you may take dud articles. We call DUD, dud articles. Rattaram wage thina rattaram, but those are not pure gold. For that we give loans, no. We are giving loans against gold articles. So therefore, if you are not having experienced people, if you take the dud articles, right? So you are losing the money. So lot of risk involving it. Right? Again, if you take the marketing strategies, you see a lot of nice TV commercials are showing the person at the difficult situation, how banks are giving and all. And top of that, now some banks are giving, if you phone the article, banks are giving mugs. Some gift items also they are giving. Not nice, no? People at the bad time, bank gives up mugs and umbrellas and give some special concession. Some banks are giving 1% less if you have a savings account, like that also, street account or maybe a ladies account. So they may give special concessions. So those are a lot of marketing strategies are used to promote this product. And again, if you look at the credit, now if you put the same thing, I'm not going to tell each and everything, but just an idea, right? If you have a credit card, what happened, right? What are the features? You can borrow. What is the features of a credit card? You can borrow. You can get some item without having your money, right? So that's a credit. It is an agreement between the card issuer, a bank, and the customer, right? And then who is the target group? Maybe individual customers, maybe corporate customers, and things like that. So what are the benefits to the customer? Without having money, you can buy items, right? And what are the benefits to the customer? Apart from that, right? Things, right? What happened? So there may be a you also have a grace period. No, if you're really using your credit card, you get a 55 days grace period. You don't want to pay, right? And we don't want to give any mortgage or security. Only your credit worthiness you need to prove, right? These are the advantage. And also sometimes you get promotional benefits. If you have a credit card holder, you get holiday 50% off. Some, if you go to some goods, they give you a 25% off. If you are using this organization credit card and things like that. So there will be a promotional benefit, and also you don't want to physically carry the money, right? So those are the advantages to the customer. What are the benefits to the bank, right? Now the moment is the one. So you improve your credit tail base, your credit tail customers, retail credit customers. You improve your credit customer base, more number of, right? And also you are charging a lot of fee-based income, late payment fees, right? Your fee-based income you can increase through that, right? And also another advantage to the bank is you're improving your digital financial literacy, right? Improving customers' financial digital literacy. That means, so how to use now. This was important during our last, the COVID-19 case. People, use more credit cards, more debit cards. Thereby, they are using a lot of credit cards, thereby increasing the digital financial literacy. I will explain. Literacy means average person's knowledge about how to use these financial instruments. Okay, what are the risks to the customer of having a credit card? Usually you need to pay high interest rate. And again, if there may be a frauds, right? There may be a fraud taken place. Then there's a theft. There is a cyber issues. There may be a hacking, and high interest rate you need to pay. And what is the risk to the bank? Credit risk. Why? So the credit card are given only for wealthy customers. They are not keeping any sort of a security. So therefore, there may be a credit risk, right? Okay. So what are the marketing strategies they're using? So they may say, if you introduce another customer, I'll give you a 50% or maybe some gift to you, or maybe something like that. Okay, that is how a lot of banks are using to promote this card. I think now you got a clear idea about all these products and features. Okay. Now so likewise, always think on this so you can apply, right? And these questions comes basically from these 5 areas. Name any product, look at it, these factors. Okay, right. So now we are moving back to the discussion, and this is happened in September 2015. and even 2017. Not only financial clients management, sometimes these questions can be asked from other papers as well. Okay, right. Now we are going to discuss another type of loan. We call them as microfinance loan. That microfinance mean the loans are given to the small time entrepreneurs, right? Who has a lucrative business and they don't have a security, tangible security offer, but they are the people we need money. If the bank systems are not there, if you have not having the properly financial legal financial system, what happened? These people are going for money lenders, right? If you go to money lenders, you know what happened, right? If you go for money lenders, they will charge high interest rate. So the return, but they are not in a position to pay back their loans, and the customer is going to badly impact on that. So therefore, a lot of banks are now giving SME or microfinance loans to a small entrepreneurs to look after their businesses, right? That's called microfinance loan. And then there's another type of loans. We call them as import loans. Import loans. Now, import loans. Now, to whom banks are giving import loans? For basically for importers. So it's a granted facility for financing of imported goods and services. Usually remember, import loans are short term, maximum of 180 days, not much more than that. Now, what are the things they are going to give? Import loans may be giving for um, uh, give some loans for once the goods are comes, maybe they want to keep these loan uh, keep this stuff, and for keep the payment of certain taxes, duties. The banks are giving loans to these people, right? Now, these loans given by banks can be settled by after sales proceeds of the customer, right? Now, say you have the goods comes and that was selling to customers, and that proceed money receiving from selling, giving to the banks as a settlement of their loans, right? Okay. So those are, we call them as import loans. You can use granted for settlement of underlying import transactions like retirements of a letter of credit bill, things like that. So if you open LC, based on that you can give loans. That's we call important import loans. So there's another loan facility. It's not a loan. We call them as leasing facilities. Right. Now, what is leasing facilities? It is in your handout, I suppose, right? What is leasing mean? Leasing is the purchase of an asset, mostly building, machinery and vehicle, by a leasing finance company which retains the ownership of the asset. That means the lessor, and then allows the client or the lessee to use the asset for a certain period of time in exchange for a fee or rent. Now it's like this. Now suppose if you want to, usually the lessor is the bank, the lessee is your customer, right? Now, so he want to buy a big machines or maybe a vehicle uh, to use it. So then he go to the leasing company, right? And agree with the price, and then the bank will, or the leasing company will work it out, capital plus interest, how much they need to get it, right? And then work it out some install. So the properties belong to the bank, but the client can use this property. That's the advantage, right? Suppose if you don't have a money to buy a big machine, so what happen? You go to the leasing company and involving in the leasing agreements, getting with leasing agreement, and you have to pay some monthly installment. That monthly installment carried your capital plus interest, right? So what is the property you are having? Vehicle. So maybe your machine, you can make use of your machine, but once you completed and you can get back the uh, uh, exchange the you can sometime you can get back the have the ownership of that property, right, or asset. Okay, but there are two types of leasing. There are two types of leasing. One is called financial lease and other one is operating lease. Now, financial leasing, you know, is the basically very famous in Sri Lanka. Operating lease may be you ownership is not going to the customer, but once you completions of this. So operating lease may be a shorter term. If you are compared with financial lease, maybe a longer term. In Sri Lanka, a lot of leasings are happening in forms of financial, right? Not operating lease, right? So one of the advantages of leasing facility, if you don't have enough money to buy a certain asset, you can enter into a leasing company, a leasing facility, right? Leasing facility. So let's look at it. Financial lease is a long-term and ownership of the asset transferred to the lessee at the end of the lease period. But as for the operating lease, is a short term and lessee retains all right of the ownership at all the times. So that's the important difference, right? And we have another called hire purchases, the same thing, but this is not covered under banking or leasing act. It is covered under separate act, Consumer Credit Act. Okay, so then so there are some loans I want to explain to you, but before that, so let's look at it. One of the questions appeared in commercial banking about the type of a loan. Now, so what's the question? What is not a facility provided by bank to a retail customer? Right? Now you know who is a retail customer. Why retail customer is a customer, remember, obtaining the banking services for personal needs. Corporate customer obtaining the services from the bank for business purposes. Right? Can you remember two types of customers? Right. Now this question is asking what is not a facility, not a facility provided bank to a retail customer. Okay, let's look at it. Right. A term loan to purchase a vehicle. What do you think? A retail customer cannot get a term loan. What is the name of the loans we are giving to purchase a vehicle? It's called auto loan, right? So term loan means is a long term. The type of loan is auto. Why auto? To purchase a vehicle. So therefore, a retail customer cannot take a loan from a bank, right, to purchase a vehicle. So A is correct. Right. We go to the D. What is D? Advance against course articles. A customer, retail customers, if you have some gold item with you, you can go to the bank and pawn your articles and you can get an advances. It's okay. No, that is pawning. Can be given by the bank? Yes. A also correct. D also correct. Now the question is not a facility provided by bank. So then we go for B, residential property mortgage loan. Right. Now can you remember what is residential property mortgage loan mean? Housing loan. A retail customer can go to the bank, can obtain housing loan. So then what may be the correct answer in that sense? Retail customer cannot get a loan for working capital loan. Working capital loan is usually given by the bank to a corporate customer, not a retail customer, right? So therefore answer is C, that is working capital loan. In order to answer this type of question, you may in a position to have a knowledge about type of loans and loans characteristics, right? Okay, then there's another type of loan. What is the loan facility you may suggest to a corporate customer? Right. So I am not who need large sum of money. Right? What is the loan facility? You can write down this point. What is the loan facility you may suggest to a corporate customer who need a large sum of money? Okay, right. How you call this money? How you call that type of loan? We call them as, remember, write a small note on this, right? We call them as syndicated loan. Syndicated loan, right? Okay, syndicated loan. SYN, DICATED loan, right? So what is syndicated loan? You can write under that the loan facility granted the loan facility granted by group of banks or several banks. So one bank also not enough. They don't have money to give a big amount. So therefore, there are several banks get together and give one loan to a corporate customer. That is what you call syndicated loan. Okay, you can write the loan facility granted by group of banks or several banks together to a single borrower. Single borrower is called syndicated loan. Called a syndicated loan. Called SY syndicated loan. Right? Okay. Suppose one customer need big money, so one individual bank cannot give. Or maybe be limitations of giving good big amount to one customer. Why? You are going to learn in commercial bank, we call accommodation, single borrow exposure. Right? Banks are supposed to not to give one customer big amount. Why? If that customer is collapsed, your entire money is not going to take. So in order to prevent that, so banks, as central bank, our regulator has given, okay, you can give a single customer only this amount. That is what you call single borrow exposure. So if in order to prevent that, so we can give a big amount, few banks to get together, several banks get together, thereby you are diversifying your credit risk. It is distributed among other banks, right? And corporate customer also enjoy that loan, because why? Because they may fulfill his requirement, right? That type of loan we call them as syndicated loan. Usually one bank act as a, we call them as a leader, right? Or maybe lead arranger, and he is the that is the bank will may take care about the entire loan, recover from the corporate customers and things like. For that they get a special fee, right? Okay, we call, what you need to know, it is called syndicated loan, right? So then we have another two type of loans. You need to know a little bit of that, and that is what you call trust receipt and pledge loan. Trust receipt and pledge loan, right? Please write. I'll give you a small note on this. So therefore, uh, please write small few points under these two um, loans. Okay, first one you write down. Okay, you just first you write down the pledge loan, PLEDGE, pledge loans. Pledge loans. I give you 3 points, 3 or 4 points. What are the features of these pledge loans, right? Now, one of these type of loans can be asked in your exam. Write short notes. Now, up to now, the two types of loans examiner tested you. One loan means auto loan. Write short notes about the auto loan. Second time they'll ask, write short notes about import of 5 marks, 3-4 points. Sometimes they will ask overdraft, pony, right? So you have to write some points there. Okay, let's look at it now. What is pledge loan? First point, please write down under pledge loan, PLEDGE, pledge loan. What is that? PLEDGE, PLEDGE, pledge loan, right? Okay, so now we usually call them as, remember, pledgee. Pledgee. Remember the keywords, two things like employee, employer. Pledgee is always bank, the loan, the person who is giving that loan facility. So therefore, who is the other guy? Right? Pledgee, like employer, pledger. Who is the pledger? Is what you call borrower, who take that loan. Remember the technical word. Pledgee, the banks who give the loan. Pledger, who get the loan. So pledger is the borrower, right? Remember. Okay, under that, you write this. Loan, and the first point, under pledged loans, loan given to customers, loan given to customers for keeping the stock, loan given to customers for keeping the stock, for keeping the stock under, stock under dual control, DUAL, dual control. Now, if you're a banker, you know what is a dual control. Always, now say check, always two people need to sign. If your bank is having the, what you call that, safe, Two people have a keys, no? One people cannot. That is what you call dual control, right? So loan given to customers for keeping the stock under dual control between borrower and the bank, that being the pledger and the pledgee, under pledge agreement, under pledge agreement. Right. Now I will explain to you this type of law, and this is very important for like farmers, right? For rice mill owners. Now what happened here? Right, especially Sri Lanka, this is very famous for pledge loan, is very famous for rice mill owners. What do you mean by that? Now say they go to night. Now you know who are the guys earlier, you name me some brand names. Those are the owners. Now they go to the customers and get the rice paddy from them, right? And stored in their certain storages. Now banks give loans those people to buy paddy from customers, right? And this paddy may be stored in a warehouse or some other place, right? And those are two locks. This is the security. Bank security is the stock paddy. So those are locked. There are two keys. One, say, put a big padlock. One key is to bank. One key is to customer. Now, if they want these goods, so they call the banks, and bank representative go there, open, and the pledger, the rice mill owner, also go there, take some stock out from that stores, sell it. Sales proceed will pay the settlement to the bank, and then again lock it, right? So otherwise, the poor farmers not in a position to give the money. The banks give loans to all these rice mills owner. They'll go to the banks, go to the farmers and collect the paddy and store it under dual control, right? Under agreement. Okay. So remember, second point. You can say example for in Sri Lanka is a paddy rice mills, right? Example you can call, right? Under this pledge agreement, remember, under this pledge agreement, ownership of the goods, idea, ownership of the goods remains with the borrower. Ownership the goods remains with the borrower, but the processors control with the bank, right? So banks are taking only the processors. idea with maybe හිමිකම නැහැ. අපි දැනට තිබිනේ අපි process කරන් තියන් ඉන්නකො විතරයි. බඩු තියන් ඉන්නවා අපි ගාව. හැබැයි බඩු වල අයිතිය custom, right? And that is the control is with the bank. Ownership is belong to the borrower, but the control with the bank. Okay, so under these pledge agreements. Okay, and in the agreement you have to show what are the item you are going to store. What is the period, pledge agreement periods, when I going to sell it, all these items, when you're going to clear, depend on that the bank will give them a loan, right? That is sometimes we call pledge loan. Okay, right. And remember, and this pledge agreement you need to remember registered, right, in the land registry, right? That is something different. This pledge agreement you need to uh, registered under land register of land within 21 days after this contract is signed, within this agreement is signed, so you need to register. Right, like our housing loan, right? Right. And usually you are supposed to take the insurance cover, right? We are telling our borrower to take the insurance cover. Otherwise, if something happened to the rice, so we don't have any money. So usually the bank will ask price me loaner, the borrower, also to get an insurance cover for this, uh, right? For his stocks. So these are some of the special features of the pledged loan, right? Okay, and then we learn another type of loan we call trust received. We call them as trust received. Again, write a small note under this, so thereby we can cover this one. We call them as trust received. TRU, trust received. Okay, a small note on that. We call them as trust received. TRUST, trust. Right? You can say TRUST, trust received. Right? It's a type of a loan again. Trust received. Trust received loan. Right? Okay. What are the features on here? අපි කියනවා සිංහලේ හරක් විතාංශ කියලා, right? Right. Okay, you can write under that point. It is a type of loan facility. It is a type of loan facility. It is a type of loan facility given by bank. It is a type of loan facility given by bank to customers bank to customers. First point. Second point, under this arrangement, under this arrangement, the bank remains the ownership of the goods. Now, can you remember pledged loan? Ownership is still with the borrower, but under trust receipt, ownership remains with the banks, right? Under this arrangement, the bank remains the ownership of the goods, but the customer is allowed to ALLOWED. Customer is allowed to hold the goods. Now here only there's no dual control, right? The goods is belong with customer, but ownership is belong to bank. But customers are requested to hold the goods and sell it, right? Hold the goods in trust. That is why I call trust received, right? Hold the goods. Customer allowed to hold the goods in trust. Okay, right. Now again, once these goods are sold by customer, the proceeds has to be paid to the bank as an installment, right? And this is how the trust receipts are taking place. Right. Okay. So that is the trust receipt. That this is purely based on trust. What is the difference between? Sometimes the examiner asks you what is the difference between trust receipt and pledge loan. Pledge loan under dual control. The ownership is belong to the borrower, processed with the bank. But for trust receipt, ownership is belong to the bank, the process with the customer, right? These are the two types of suppose, right? Now the trust receipt, suppose sometimes the importer, for an example, importer gets some goods, but they don't have a money to clear the item from the customs. So banks give loans and ask him to keep the stuff and selling that goods, and bank will get the installment or the loan payment back, right? And that is what you call the trust receipt. No question asked yet, right? But there may be a questions can ask right about the short notes, right? Okay, right now. Um, right. So we will now learn different type of loan. Right. Now, again, so you look at it, the last type of a facility we are going to discuss with you. Look at this question, right? This is the 2019 financial crimes management, and that is our subject question. Based on that question, I will give you the answer. Right. Don't write that question. It is available with the IBSL. You can get down all these questions, right? I show you type of question you are come across, right? What to write, I will explain, right? From this. Okay. Now, before you write this, before you look at this question, I will explain what is type, what sort of a loan facility they talk about. Right. Now, say for an example, if you're going to buy some stock, if you're doing business in stock market, definitely there is a broker. There is a brokering company you need to get involved in, right? You can't do direct share buying, stock buying from the stock exchange, right? There is a broker, you need to register with the broker, right? Okay, so remember that, right? Now, if you are dealing with share market, when you are buying shares from the stock, from the stock exchange, so you need to do through a broker, right? That, of course, you know. I think that is you are going to learn in commercial banking rather than a commercial banking. I think you're going to learn under survey on that, right? To my knowledge, right? Okay, doesn't matter. Forget about where you're going to learn. Now, if you want to do a share business or stock market, stock business in as an business, so you need to get a support from stock market or what you call brokering company, stock brokering company. Right. Now, you want to buy some shares from an X company, say for an example, you want to buy John Keel shares, right? So you want to buy, you are just thinking the John Keel share price going to increase maybe in another 5-6 month time, right? You are going to buy, say for an example, 30,000 or maybe 1 million worth of shares from the John Keel's shares. John Keel shares you're going to buy, you're going to purchase, say for worth of 1 million shares. But at the moment, you are having only 500,000 money with your hand, right? You want to buy 1 million worth of shares from John Keys from the stock market, but you are having only 500,000 rupees. What is your short? You are short around 500,000 shares. Then you are telling your brokering company, you want to buy 1 million, but you don't have money. In such circumstances, the brokering company are giving some sort of a loan to you to purchase this full entire shares from John Case, giving 500,000 loan facility and keeping that 500,000 as an earlier the customer's 500,000 as a guarantee, right? Now, if a share trading company, or mean the brokering company, also comes and is a financial institution, can give loans to such customer to purchase stock trading, we call them as margin trading facility, right? What you call that? Margin trading facility. If you say margin trading facility is a type of loan facility given not to buy any other goods or any other things, to buy only shares. Now, who is giving? Usually a financial institution. We call them as a stock brokering company, right? So then you can write, you can put margin trading facilities as a topic, right? You can write margin trading facility, like you say pledged loan, you put trust receipt, likewise auto loan, housing loan, like that. Subheading margin trading facilities. Under that you can write margin trading facilities is the specialized loan product given by the financial institution, stockbrokers for share trading activities. Same thing, you put it as a short notes. Right. Okay. What is margin trading facility? It is the specialized loan product available with financial institutions, stockbroker for share trading activities at a stock exchange, is called margin trading facilities, right? So what is margin trading facility? I told you the example, right? Suppose the customer not having enough money to purchase excess shares, the loan facility is given by the stockbrokers to the customers to buy the additional shares is called margin trading facilities. Clear? Understood now? So answer is margin trading facility. That questions came on September 2019 in financial crime management. Right. Now, what are the type of loans we have learned up to now? We learned term loan, housing loan, overdraft, pledge loan, trust receipt, credit card, auto loan, import loan. There are different type of loans, right? So we are going to discuss later on. I'll give you a question, right? Name the customer. Now, say for an example, importer. What type of loan facility is given by the bank for importer? Import loans. Or another type of loan you can consider him as what? You can give what? Trust received, right? So you have the customer, say importer. Now say for an example, farmer. What is the type of loan bank can give him? Pony, okay? SME loans, likewise, right? For business person, what loan you can give? Term loan or working capital loans, things like. For share business person, what type of loan can give? Margin trading facilities. right? Okay, now I think you understood the type of loans. Always look at it this. Now we learn depositors, we learn investors, what are the type of products they are purchased, and we discuss borrowers, what type of products they are going to purchase, right? Okay, now we have come to a end of the our type of clients. So you have already have a important notes with you, where which we are going to discuss next week. Very important, right? The legal aspects and practice of banking. Okay, now let's look at it. The last segment of customers, payment service customers. Right. Now look at it, payment service providers. Facilities effect, who are the people? Facilitate effective and efficient payment and settlement process locally and internationally. Most of them are online, real-time basis to expedite financial transaction. Right? Now see, if we want to send money from another account, from my account to another customer, so somebody has to provide payment service, right? Then you look at it, the customers who provide that services, we call them as payment service customers. The customers who are obtaining the services from payment services providers, we call them as payment service customers, right? Okay, now let's look at it. In Sri Lanka, what are the payment services systems available, right? You may will ask you some question on this. The first one is called slips. That is mean, always if you have a word SLIPs like abbreviations, you need first is you have to explain what is SLIPS stand for. We call slips. Slips mean Sri Lanka Interbank Payment System. Interbank payment system is an online interbank electronic fund transfer system, right? Now say for an example, if you want to send some money, right, for an example, X bank, X company want to pay their salaries, for their employees, that company can be used the sleep systems. Because now say for an example, you have account with us, you have account with B bank, the company has an account with B bank. So there are different customers, different employees are working in that banks. Their customers are may having with different type of banks account. Okay, forget about that. Look at it, teachers. Look at it, pensions people. Look at it, teachers. Education ministry want to pay salaries. The teachers are different part of the island. They are having different type of accounts. Different type of accounts with different type of banks. Education minister prepare the list of teachers. In front of that, they put the account number and the bank. And the education department or education ministry, right, give it that list to the one bank and ask them to send to all these money to the different part of the island where those teachers are Look it, right? And that who is providing this facility? Through Sri Lanka Interbank Payment Systems is an online interbank electronic fund transfer system. What is the maximum value under slips you can transfer? Maximum of 5 million. In fact, this was introduced in 1994. Electronic fund transfer is a movement of funds from one account to another account without a corresponding piece of paper or authorize or prove that the transfer had occurred. Same day, but not immediately. Not immediately. Same day, not immediately. Right? Okay. For that, banks are charging rupees 50 rupees per transaction, irrespective of the amount. Right? Now say I want to send the money to Mr. X. Bank can make use of slip system to send this X my money to Mr. X account through the system. That systems we call slips. Okay, slip systems. And mind you are going to learn this one also in other subjects, survey as well as a commercial banking. But we need to look at it from the customer's point of view. Now the second one we call SEFT. SEFT means you need to know the abbreviation, the Common Electronic Fund Transfer System, right? Transfer switch is an online fund transfer, same as slips. Then what is the difference? And this is introduced in 2015. Remember, slip system is introduced in 1994 and SEFT is very recently used. And again is a money transfer system online. And it is an real-time fund transfer method. Now, if you put the money, it immediately go to that account. Now say, immediately from account to account. But the slip is not like that. Slips is first go to the bank, and from the bank only you divided that amount to the individual account. The SEFT is from account to account. Slip is bank, then first is go to the bank, and from the bank is put into the accounts. But SEFT, when I send it from here, straight away go into the account. That is what you call online real-time fund transfer. But slips, it's not online at once, right? It may take some time. The amount also, rupees 5 maximum, but charges may be more than that. Now, say for an example, if you look at it, the SEFT is go like this, right? Now, say if you look at it here, what is the difference between slips and SEFT, right? Say A, from account, you go to the B, maybe another bank. This is bank B, sorry, bank D, and this is bank C. Now he's asked bank C to send 100,000 rupees to send to the customer B in a D bank, and it's automatically go to the D bank customer's account. Whereas slips is not like that. If you go for slips, first slip is going to the bank, and from the bank only they put it to the account. Right? Okay, so that is online real-time money going to the bank is called slips, and whereas the other method we call them as slips, right? But both cases The value is maximum of 5 million. Now, if you really look at it, this question, the accused question came on in financial clients management. You are the branch manager of a bank, and one of your important customer has requested you via email to transfer rupees 1.5 million from his account to an account of a third party in another bank on the same day. Same day. Now, briefly explain the methods to carry out this transaction on the same day by the bank. Same day. So what are the methods available for you then? The customer comes to your bank or send your email, asks to transfer 1.5 million from your account, another account of a third party, another person, another bank on the same day. So what is the method you can use it to transfer money? You have two options. What are the options? One option is SWIFT method, other one is SEF method. Right? Both you can use. Why you can use both? Same day. Now, if the customer asks you, I want to send the money, not the same day, same time as it is, then what is the method you are going to use? SEF method, not the SWIFT method. Okay, so you know that now the difference between these two methods. Right? Okay. Right. Logging to the internet bankings, right? Okay. Then there's another systems we call RTGS. RTGS mean a big value. If you want to send, now earlier cases only up to 5 million. If you want to settle more than 1 million for a big amount, so you are using the real-time gross settlement, right? Real-time gross settlement. It is again going on real time, but remember, it is to be working in operating hours, right? And you are charging 1,000 rupees. Usually bank will charge 1,000 rupees for if you want to transfer a big amount. Okay, same method, but we need to sign big amount. But then there is a now who is the party who is doing in behalf of these things? Lanka Clear, right? Now recently, so the Lanka Clear have introduced another initiative, supposed to not to pay big amounts, to pay below 10,000. Real-time retail payment method, right? In order to avoid this. Now, suppose now, if you use SEF and slips, even for small amounts, and also some people are using 1 million, then there's a traffic, no? So banks, lot of monies are coming to the banks, right? Small amounts, big amounts. In order to prevent that, the Lanka Clear is the central bank subsidiary, and they introduce another system. If you want to send to the banks a low amount, less than 10,000, that systems, that like slips, like SEFT, that method is called just pay. Right? So therefore we have at the moment 4 types: RTGS, just pay, SEFT, and slips. Okay, 4 methods. You can get the services payment provided. Customers can get that services. Okay, now let's look at it before you winding up today. Right? Look at it. 2000 March question. That is commercial bank. Don't worry about which question comes from which subject, but is applicable to here. It can come to clients management. Okay. Now, what is the question? Now, look at the question. What is the payment system introduced by Lanka Clear. That means who initiates all these RTGS and things like that. What is the payment system introduced by Lanka Clear that supports real-time electronic fund transfers of individual customers? What may be the things? Real-time gross settlement? No, it's usually go for high value, a group, right? Not small amount. Sri Lanka interbank payment slip, that is slip systems. Real time? No. ATM switch mean you go to the ATMs and you need to get the money back? No. Right. What is the real time method? What's the answer here? Common electronic fund transfer switch. That is what you call SEFT systems. Therefore, the answer is for this one is B. Now let's look at it. 2019 March survey of financial system. Another question from another subject. Which of the following is considered as a part of the systematically important payment system of Sri Lanka? What do you mean by a systematically important payment mean? What do you mean by systematically important mean? The big amount transfers, right? What is the following is considered as a part of the systematically important payment system? If you want to send systematically big amounts, so what is the systems you are going to use? Whether you are using SEFT or slips or RTGS, the answer is the RTGS. Okay, right. Now, this is your 2019 March question. Or examiner asks you method used for transfer of funds on the same day. The candidate should explain any of the following methodologies. Right? Question, right short, RTGS, SEFT, slips. So which I gave you, please write. The final one, final question on this. Identify the most suitable financial services that could be provided to meet the following customers. This is a financial client management question. A large corporate customer to pay salaries of the employees without issuing currencies. What is the method you are going to use? Best method. Usually, you know, if you are working for a bank, how a corporate customer to pay salaries of the employees without issuing currencies. What happened? Corporate customer give a list of employees' name and give the what? Employees' name and the respective accounts number. So what is the method they are using? Slip method. Why? For one account, so we need to identify each and every employee account and just put the money. That is slip system. Second one, government to finance a road development. Government to finance a road development project involving a high level of funding requirements. That means the government to road development, the money can be transferred, not small amount. No, that is indicating big amount. So what is the method government to use? Then RTGS. Right? Remember. So a corporate customer who imports food items to the country, again a big amount. And again you may use RTGS. The individual customer who want to donate fixed monthly contribution to the student for his education, it is a continuous thing. Straight away go to the student's account. An individual customer want to send to the customer's individual account, straightforward, customer to customer. What is the method you are using? SEFT method. Right? Now, without asking the methodology, so they try to identify, they're giving a different type of customers and requesting from you to identify the best method for payment transfer method of such customers. Again, large corporate customer to pay salaries, we call slip systems. Write a one check, give the list of all the employees. So you put it to the one check is coming to the bank, one amount. Then bank going to put, now that is what I told you. Okay, now this corporate customer A send a checks to the B, your bank, right? Full amount, say 125 million. Now here you have a employee 1, 2, 3, 4, 5, 6 like that. So what you're going to do, you have the big amount. From that you have to put it to not history. That has to be done by your bank. Say 100,000, 25,000, 50,000 like that. You're putting. That is called SIPs. Big amount from here we called him government finance. Big amount you put RTGS because of high value. Usually high value road development is usually high value. Okay, right. And then the last one you call send individual customer want to send money to the individual customer monthly fixed amount. We use SEF system. This is you say my account to customer's account. So what is the best method you using? So therefore for that is called SEFT. Right? Okay. So with this small note, so we are going to come to an end of type of financial clients. From next week, so we are going to discuss the next topic, which is very interesting, and customer protections laws and practices. So don't miss, more questions are coming on that area. I have already emailed to you. So the institutes had already given you the handout, and keep the read the handout and be ready with this. Okay, right. Right, there's a small one, RTGS. Have you understood, Puta? Okay. Right, the question is, do we have exam on September? There's some question asked. Most probably we may going to have not in September. I think little late of September. Now last time, last students, we don't have the exam in March now, and these two exams going to take place most probably, to my knowledge, maybe a little late September, maybe October, because A level also going to take place now. So therefore we also having the exams through the schools now. So therefore we can't have it simultaneously. So most probably, right, it has to be not yet decided by the institute, but is most probably maybe somewhere in during October. Definitely maybe somewhere in mid-October or late October going to take place. Still not decided. There you are going to get the same question paper. Now we have prepared the question paper. Most probably same question paper going to have for the March students as well as you all also, right? So that is what I want to know, but it's not yet confirmed. Most probably one question we are going to have somewhere in October, right? So any other questions you need to clarify? Anything you need to ask? So Mohammed Dilshan, you put RTGS. Why? What is the but you say no, sir? Chalani had mentioned no, sir. What is no? Can you open your, can you switch on your mic and just tell me, Puta? What do you say no? Right?
No questions, sir.
I didn't get it, you, Puta.
No questions.
No question. You say no mean I thought you are not understood anything. That's not okay. No problem. No problem. So right, we do have some yes. Thank you. So Mohammed Dilshan is there. So what do you why you put RTGS here? Are there any questions to clarify? Mohammed, you are here. I saw a question put RTGS. You need to clarify that or yeah for the previous questions. What do you need? You can switch on your mic and ask from me, Mohammed. Dilshan, you want to clarify? You said for the previous question. What do you need to ask from me? You are here? Dilshan, you can switch on your mic and ask from me if you want. No, all right. The answer was okay, right? Thank you. So we will see you on next Saturday, Sunday. So we have just completed the type of clients. Sorry, sir, no mic. Okay, okay, no problem, Dilchan. So from next week is very interesting also, and so we have learned. Type of clients we completed the type of clients that the first we have a 5 session. One session we have already covered. Now we are going to start the next session. That is what we call customer protections and practice, right? And there are very interesting areas, and definitely 1 or 2 questions are coming from that areas. It consists maybe 3, 4, 5 sections. Please read. I sent you a Word document also to get a more understanding. So I will explain to you next week the other points. Okay. Okay. See you on next Sunday at the same time. So that already uploaded that this PPT already. No, it is there, Puta. This PPT slide is in the Google Classrooms, right? It is there, Puta, right? Taranga. So it is there. It is in your classroom. We go to the classroom. So all this its handout is available, right? Where is not available, I will dictate to you, right? Okay, right.